Hey, Dan Passarelli here. I'm sometimes asked by traders who watch some of these videos, Dan, why do you have these volume bars displayed on the chart here? And I look at volume and I put them on the chart to save room so that I don't have to tie up another indicator down here. But let's talk about why I look at volume. So, volume can be very important when combined with the direction of the stock that day. So, take a look at this chart here of Biogen. There are many days, like for example, let's just start with this day, happens to be an earnings day, where there was high volume and the stock was up. Now, some people may call this up volume. So, the stock is up with volume, with higher volume, right? And what happened after that is we got a little bit of follow through. Okay. And the theory, and well, let's look at a couple other examples here. Let's look at this example where the stock is down on higher volume than we saw for the previous few days, and we got some follow through. Here's one after a couple days of up days, we have an up day on higher volume, and we got some follow through. Now, it doesn't always work out that way, but there is something telling about it. And there's really two things that are important takeaways here. One is what I would call conviction. Remember, why do stock prices go up or down? It's because there's more sellers than buyers at that price point is why stocks go down, and if they go up, there's more buyers than sellers. And so when there's a high amount of volume, there's a lot of buyers and sellers sort of fighting each other, but the buyers win out. So the buyers had a lot more conviction and they took out all of the people who wanted to sell at those prices. And so therefore, there's not as many sellers there to push the stock back lower. Now, the other thing is almost a restatement of this idea of conviction. It's kind of following the smart money a little bit, right? We work under the assumption, which has some truth to it, but it's not 100% universally true, that professional traders are really smart people, right? And I've been in this business for 29 years, and I can definitely give some counter examples to that. But the not smart traders don't tend to last very long, and so we can kind of follow the smart money a little bit when we look at like up volume. The stock is up on high volume. That could be a better time to buy, because there's all this conviction. Somebody who's trading a lot of money pushed the stock up and took out all of those sellers. Might be a good reason for that stock going lower, here too. And when stock prices change on low volume, that doesn't mean conviction or anything. That means basically nothing. It's about conviction. It's about following the smart money. Any trader should always try and get their trade ideas by observing and following traders in whatever regard that know what they're talking about. So I hope that helps. This is Dan Passarelli, Trade Smart.